Okay, good morning, everyone, and welcome to the fifth annual Academy of Science of South Africa, or ASSAf, Science Business Leadership Forum. This idea of having an annual meeting that discusses issues of joint concern to the scientific community as well as the business community was proposed by a former executive officer of ASSAf, and we have stuck to that commitment to once a year bringing this community, these two communities together among many other presidential roundtables that we convene. Today, we have the exciting topic that I know nothing about called Unmasking the Enigma, called FinTech. And we have with us three of the smartest people on the planet, in my view, who actually study these kinds of questions. And I will introduce them in a minute. Why is this important? And why did we, as the Academy of Science, decide to put this question on the table? I think one of the reasons is confusion. There's a lot of confusion in the marketplace about what do we do? How do we understand these new currencies? How much of this is hype? How much of this is real? The arrest of some very high-profile figures in the cryptocurrency business has obviously also made people skeptical about everything from blockchain technologies to alternative currencies. Now, here's the problem. We, an Academy of Science, we work with the truth. And when you have questions of truth and evidence and at stake, you don't turn to the quacks, you turn to the experts. And so that is what we do today. Tongue-in-cheek, since the Minister of Finance just announced that the country's run out of money, I'm all ears in listening to these colleagues of ours tell us what the state of money and the status of money is in a very turbulent global economy. Our first speaker will be Professor Vivienne Lewak. She is the DVC academic at the University of the Western Cape. Her academic standing was really established as a professor of law in the Department of Mercantile Law and Labor Law, also in Quebeca, or Port Elizabeth as it was then called. She also belongs to a very famous family in the Moravian church community that produces unbelievable choral music that every now and again I dip my feet into. She has an LLM from Nelson Mandela University and the LLB from UNISA, and she has just produced a stunning new book, which I would definitely, as a non-law person, recommend you all read. Anyway, there is a long CV. You can read it at your leisure, but it is my privilege to invite Professor Lewak to be our first speaker, and you will also see the title of her speech in your program announcement. What FinTech is, its adoption on the African continent, the regulatory conundrum, with particular emphasis on challenges and benefits posed for regulation authorities. Professor Lewak, I hope you feel very welcome. Over to you, ma'am.
Thank you very much, Professor Jansen. It's really a pleasure to be here this morning at your ASSAf scientific desk. Just before we started, Copia said, no slides. I think we are tired of slides. So a few things I want to mention as part of this conversation. When one looks at FinTech, and it's not something new, I think sometimes we get drawn by some terms that sound very, very sexy. But what is important is to notice that the way in which we make and receive payments, the way in which we save, invest, how we manage risks, how capital is raised, that's changed dramatically. And also the form that money has taken, that's also changed. And I know that Copia We'll specifically be dealing with a central bank digital currency later and whether we're ready. And money itself has evolved over time from paper-based legal tender as we know it, the coins, and now we're talking about things such as cryptocurrencies, stable coins, and CBDCs, to just mention a few. Then within this space, it's also interesting that if you look at some of the activities, now we have digital banking, equity crowdfunding, peer-to-peer lending, even things such as robo-advice, digital payments, as I said, and insurtech or insurance. And then all of these various ones could potentially make up, if you just look at it from a perspective of activities, what would be known as FinTech. Second point I want to make is that after 2008, with the global financial crisis, we really in our book see that as a kind of a tipping point that intensified this interaction between financial services and the technology, and we call this the age of the FinTech boom. What is also interesting is that Africa and Asia are predicted to lead the rest of North America, Latin America, and Europe in terms of FinTech's adoption. Now, I want to mention a little bit later what are some of those reasons. One of the things that stand out, and we were talking about it just now, our continent is very unique in certain respects, but one of the grounds for justification of this growth is the lack of infrastructure in developing countries within the continent, of course. It does leave room for innovation that that would not find success if you are in a developed world where it's maybe overbanked and heavily entrenched economies, especially in the West. So when one looks at the broader context of FinTech, so what can it do? It can help financial sectors become more diverse, comprehensive, efficient, and inclusive. But later, when I deal very briefly with the regulatory conundrum, I will also deal with the kinds of risk and challenges. And so your question when you were saying, is this just hype? And if we've seen some of the failures, spectacular failures, especially in the cryptocurrency market, then it's important also to balance some of these benefits with the risks and challenges. So what is FinTech? We've looked at a lot of definitions, and ultimately in our book, Chris Albert Puja and I came up with the following definition. And it's linked to our belief that if you want to define FinTech, you can't do it in isolation, and you need to see it as a systemic phenomenon. And if it is a systemic phenomenon, it necessitates a systemic regulatory approach. So we have the following elements in our definition. FinTech is, number one, the application of top technology to finance. Number two, it has the potential to improve the financial sector's effectiveness and efficiency. Number three, while it also likely disrupts one of four things, either your existing models of delivering financial services, your incumbent providers of financial services, established practices, and aspects of the regulatory regime. And if you bring those together, what stands out for me in that definition is really that unless you can really talk about how the innovation has that impact, and that not only the innovation, that you combine that with the disruptive impact of the technology. So it's interesting that on our continent, just between 2017, in terms of the growth of the FinTech sector, it's estimated at roughly then at $282 million and the figures I saw for 2021. And because the sector is so dynamic, if you look now, then the figures would be different. Is something around $2.2 billion in 2022. So it is expanding at a very rapid rate. And the continent is especially lauded for its pioneering efforts in mainstream mobile money. And Louis and I worked together in a big project a couple of years ago. I think it's 10 years ago, Louis, around mobile money and financial integrity and inclusion. And we've seen the largest mobile money uptake in the world on our continent. And most of you would be familiar with the history of M-Pesa and Safaricom, etc., and how that then played out within the continents, in our continent. What's also interesting is that what are the 4 biggest cities that make a contribution to the sector? Lagos in Nigeria, Cape Town and Johannesburg in South Africa, and then Nairobi in Kenya. So it's interesting that South Africa's got 2 cities that have that are on the top 100 in relation to fintech adoption. But other African cities that are also making great advancements in fintech include Accra in Ghana, Kigali in Rwanda, and then Cairo in Egypt. So let's look at the benefits of fintech. So besides the fact that it can improve on your efficiencies or effectiveness within the market, the fact that it can lead to, depending on the model, greater financial inclusion, even competition, etc. But there are some constraints or challenges. And what are those? Consumer and investor protection, that's one. On our continent specifically, the clarity and consistency of regulatory and legal frameworks. And what we talk in our field is the potential for regulatory arbitrage. And that's where you'll find the best regulator to enable you, and then contagion, which is systemic risk. Then thirdly, the adequacy of our existing financial safety nets, including our lender of last resort functions of central banks, the potential threats to financial integrity that Louis will deal with as well. How does one ensure a level playing field between the regulated financial institutions and the fintech players, which oftentimes might be technology companies and not necessarily traditional financial institutions? Then if you're in a country where there's already a dysfunctional system, fintech can also exacerbate that, because it can also, through fintech, if one of the things that can happen, that you can have a misallocation of money in the economy. Some other risks are, when we talk about this can enable such greater digital innovation, it can also be a means to, or that it can improve digital divide. It can also, depending on the country in which you are at, it can also potentially undermine the digital divide. There are various other risks that if there are questions, I can speak to that, but let me just end off with the regulatory conundrum that we have. So if you're a regulator, what do? And there's a couple of ways in which you do. You can either take your existing regulatory framework and you try that you apply to your traditional financial institution, and you can see how you can apply fintech within that. Or you can have very tailored or specific regulation around that. You prohibit, sometimes you have prohibition. You can adopt a wait and see approach or a test and learn. That's where you develop something that what we call a regulatory sandbox. And you could even have innovation facilitators. These would be your innovation hubs and accelerators. So from a regulatory perspective, the conundrum that they have is that it's not always easy to balance promoting fintech and the innovation and benefits that come with that, and confronting the challenges which they pose. So we often argue that it's sometimes even impossible or nearly impossible to simultaneously achieve the goals of promoting, for example, financial innovation, ensuring market integrity, and then to develop clear roles for the financial sector. And then oftentimes policymakers have to choose of what we say they have to trade off. So in conclusion, the 2018 Bali FinTech agenda calls for countries to adapt regulatory frameworks and supervisory practices for the orderly development and stability of the financial system, whilst noting that new risks may arise. That's my way of saying my 10 minutes is up. Just one last sentence. But the Bali FinTech agenda does not provide the specifics of how countries need to do it. And what's very clear from our book is that unless we have almost a coordination or a coordinated approach of regulators, business, academics, government, in a sense, coming together to understand how does one enable as well as regulate, then we're not going to get the best answers to this phenomenon. Thank you so much.
Thank you very much, Professor Levak. That was really, really good. And the reason I appreciate your talk is it's accessible. I think even for non-experts like myself, I could follow the argument, and you laid it out very clearly. Could you just come back online? Can I just see you again? Vivian, could you just quickly give the audience the title, the exact title of your latest book, in case they
Yes,
want to...
it's called FinTech Law and Regulation, an African Perspective, published by Juta now in September 2023.
Thank you and congratulations.
Thank
Our
you.
next speaker is Professor Louis de Kooker. You could hear from the name that he's one of us. He's a South African. And if the rugby doesn't bring him home, I hope FinTech will, you know, but you will see from his very impressive CB summary that even though he is abroad, he is very much involved in researching issues of financial crime across borders and in South Africa. In fact, his latest book is called Money Laundering and Terrorist Financing, Law and Compliance in South Africa with LexisNexis, apart from financial technology and the law, with spring out both in 2022. Louis is extraordinarily busy, as you will see from the CV, not only in other countries on these research themes like Jordan, Kyrgyzstan, and Namibia, but also advising on these matters for the World Bank, the IMF, and others with respect to financial crime. And it just strikes me, Louis, that when one talks about financial crime, you might as well be talking about pandemics or about climate change, in the sense that these are borderless phenomena that requires, per definition, that we talk with people in a transnational context. It is a great pleasure to welcome you, Professor de Kooker. You muted, I think, Louis.
I am muted. Professor Jansen, I was saying I appreciate that very kind introduction, and I'm really honored to be joining you and joining this particular panel. I anticipated what Vivian will say about FinTech, and she provided a brilliant introduction and definition. My task is to very briefly introduce some of the integrity or the crime elements that you have just referenced, Professor Jansen. And in order to do that, I've got a small deck of slides and will do my best to work quickly through them in the next minutes at my disposal. Generally, the theme of what I'm going to say deals with the problems of solutions that cause new problems that require solutions, and so the process continues. If we think about FinTech, what Vivian has positioned very well is the incredible power of FinTech to solve some of our problems. How mobile money has helped us to broaden the reach of financial services to so many more people on the African continent. So financial inclusion at an affordable rate. Service costs have been addressed. The convenience factor of that technology-enabled financial services provide. The benefit of moving away from cash, with the obvious anti-crime benefits in that, to tax efficiency, financial monitoring. But Vivian also touched on some of the problems that FinTech causes, because FinTech often places a lot of power in the hands of new FinTech companies. And once they captured a big share of the market, they don't necessarily want to allow competitors to come in and plug and play. So we have interoperability problems. We've got consumer protection problems. We've seen waves of over-indebtedness as new people started to access easy loans offered to them digitally and ran into strife. We have surveillance issues by states, by institutions of us as consumers, but then also by criminals who hack into these new data streams. And we've seen new crimes being enabled, from money laundering to terror financing to scams by FinTech. But FinTech has also brought us solutions. It has brought us RegTech, so compliance technology that has actually made it easier to deal with some of the problems and made it easier and cheaper for companies using data to comply. We've seen compliance being baked into technology. So compliance by and through design that actually provides a higher level of assurance that it's operating within the confines of the law. We've seen supervisory technology, SupTech, that has helped supervisory bodies to stay on top of fintechs that are generating data at extraordinary speeds so that they can pick up when things are going wrong and intervene earlier. We've got financial intelligence technologies. We've got ID technologies all developing in and around this space. But again, all of these solutions also give rise to problems. To feed these solutions, we need big data. To feed good AI solutions, we need data. That data is being harvested, and a lot of it is being harvested in Africa from African consumers. We are empowering through the data harvesting, surveillance, again, by the state, by institutions, and by criminal organizations. We are empowering cyber criminals. We are empowering them to develop their own technology to target us. But again, as Vivian has pointed out, regulators have had to adapt and find new ways to deal with this wave of innovation. And it's wonderful to see. In the past, lawyers were conservative and the law and legal solutions were produced long after the problem surfaced. And now through sandboxing and test and learn, we find collaboration between innovators and the regulators, with both trying to figure out how to regulate the new technology and how to ensure compliance best. We know that a lot of our solutions are biased. So we've seen great developments around bias auditing, much more alert and involved regulators with ongoing monitoring and vigilance, because we know we don't understand all of the risks accompanying the innovations. That requires, of course, capacity building and collaboration. It also requires a strengthening of the rule of law. And all of that, again, of course, is challenging and challenges us to find solutions, while the criminals are undermining a lot of the good work. And we have small countries. There's headlines, for instance, of Vanuatu was offline for about 7 weeks last year, the whole government of Vanuatu, because they were hacked. And even the US, their key security and intelligence installations that develop hacking software were hacked and had that stolen. And now the criminals are using their military-grade hacking software against us. Now, kind of moving towards the end of my remarks, the RegTech and SupTech that we see developing in this space is really exciting. We've got much improved customer due diligence that banks can employ when they use the technology, and to monitor transactions, not only to look at criminals, but also to find out what is ordinary and general transactions where the transactions can proceed and customers don't need to be bothered by FICA, for example. But we also see great space for innovation from a SupTech perspective. I've seen regulators moving from a situation in the past few years where banks still delivered their monthly data on disks by courier to the supervisory body, to actually providing that in real time, which is really empowering for everyone involved. We see new models developing. At the moment, banks, when they identify suspicious transactions, have to report that to the FIC, in South Africa, in Pretoria. And I think you're well aware of the reporting obligations. But the problem is banks don't know what the intelligence services want them to look out for. And sometimes it's too sensitive. The intelligence services can't tell the bank. So the brain isn't communicating with the eyes. So in Australia, our equivalent of the FIC had a pilot where they developed an analytical tool that they would insert into the bank systems that would look for suspicious transactions, but would do it in a way that it is sealed so that the bank doesn't know what it's looking for, but double sealed so that this government can't see the private data, financial data of the consumers. And technology enables these new approaches. Towards conclusion, just to show an example of how well this can work, we know crypto has been an area that's been liberally abused by criminals, but technology developed that have actually broken through a lot of the anonymity and pseudonymity in this space of crypto, and have become so good at identifying the payers and the payees that this reflects payments to Hamas and crypto wallets linked to Hamas. And if you look at that, in April this year, there was a dramatic fall basically to zero, because they put out a call to their supporters not to use crypto any longer because it is now too transparent. And as a result, that whole money flow was impacted. So from crypto crime to crypto forensics, and again, the criminals will devise a method to respond. But again, we will need the brilliance also of this body and the experts to counter that. So thank you so much, Professor Jansen, and I stuck within the 10 minutes. Thank you.
Thank you very much, Louis. You also have a background, I noticed, in teaching at UWC. And as I listened to you and Vivian, I sort of say, where were you when I was a struggling student with very, very boring lecturers? Anyway, very well done, very accessible. You ended on a somewhat provocative note, which I definitely will come to, which relates, if I can just prep you for this, to ethics, politics, and surveillance of cryptocurrencies. It does seem to me to be a little bit more complicated
Thank you.
than appears, but you don't have a lot of time for that. Our next and final speaker in the series before we open up is Professor Copier George. As you will see from his CV, he is a very accomplished scholar as well, holds Sauchi Chair in Blockchain Technology at UCT, has taught and researched and advised at universities like MIT, Princeton, Oxford, Columbia, and so on. Columbia is, in fact, got a research affiliate position, and is obviously, in the nature of this field, a global figure when it comes to issues of new financial systems. Copier, it's a wonderful privilege to also welcome you and invite you to speak.
Yeah, thank you so much for the invitation. It's a great pleasure to talk a bit about some of the technology, because the design of the technology has implications not just for the economics, and I'm an economist most of the time, so working with central banks on issues like central bank digital currencies, to which I will also come towards the end. But the design of technology also has implications for the law. And I'm working on a recent book with a colleague at Columbia exactly on this question of how technology choices shape the legal choices that we make, and vice versa, of course. So just to start off my remarks, I would like to give a very, very brief, hopefully accessible introduction to blockchain, because the design of that particular technology matters for what we can do with it. And I want to start with a very simple reminder to accounting as it is today. So accounting as it is today, we have, for every company, we have assets and liabilities. Whenever we make a transaction, it is reflected on two balance sheets. On the one side, it is an asset. On the other side, it's reflected as a liability. This double entry bookkeeping makes sure that every transaction is recorded in two places, and that as we sort of inspect the books of different companies, we can make sure that they are mutually consistent, that no fraud has occurred by simply, tallying up all these individual transactions, because they are reported in different places. the system is sort of self-reinforced, consistent. If all goes well, you know, if the accountants do their job, if everything is as it should. Now, an alternative way of managing a ledger would be not to have assets and liabilities, but rather simply have a list of transactions, a list of single entry transactions, where every transaction where one person pays another is recorded just as that transaction without referencing the assets and the liabilities, without referencing balance sheets as they were. The difficulty with the system, obviously, is that there's no check, no mechanism to make sure that the ledger isn't manipulated, that all the transactions are as they should be, that nobody spends more than they have in their wallet. So one way of ensuring this is to move from the double entry bookkeeping that we have to single entry bookkeeping with a distributed ledger, with a ledger that is maintained in more than one place that can be inspected by everybody. And in essence, that is what blockchain is doing. Now, there's several technical challenges if you want to do this, because you need to make sure that everybody who maintains the ledger actually agrees on what the ledger is. So to manage this, smart people have come up with consensus protocols, with ways of ensuring that everybody agrees on the same state of the ledger, that everybody's on the same page about what has been recorded, who has transferred to what. And these different consensus protocols were implemented first with sort of predecessors of Bitcoin, but then famously with Bitcoin, where we came up with solutions for how can we make sure that the ledger is mutually consistent by requiring everybody who wants to write the ledger, who wants to keep a copy of the ledger, who wants to append something to the ledger, to exert a little bit of work. And that work is basically burning energy to solve a cryptographic puzzle. If you do that, you can show that the incentives actually work out really nicely, so that people will have an incentive to maintain a correct version of the ledger. And this gave us the first sort of private crypto asset, Bitcoin. Now the evolution since then has been more towards sort of different forms of private crypto assets, but also towards public crypto assets, what we would call central bank digital currencies. From Bitcoin, from this very first, basically just a ledger of a list of transactions between individuals. In the early days, many of them were not tied to a natural identity. They were not KYC, know your customer regulations were not enforced by the exchanges that managed people's wallets. Since then, I think we've done really a lot of work to ensure that all transactions are tied to identities, which helped with the countering of financing of terrorism, for example, as Louis just mentioned. Moving to a world where digital crime using Bitcoin has become more difficult. I think it's not impossible, but I believe it has become much more difficult with sort of the recent regulatory foray into the space. Now, banks and other financial institutions initially were very skeptical, as also central banks. Why are a bunch of guys sitting at the beach in their shorts and sandals, why are they allowed to create their own money? What would that do to central bank money, to the dominance of central banks in making sure that money is safe and sound and accessible? How can we ensure that this new form of money, or this new form of value, isn't just appropriated by a few where others are excluded? So central banks started to get involved into this, looking into applications of distributed ledgers, but tied to the central bank itself. South Africa has always been on the forefront of this. In 2018 already, there was Project Coca, which was a so-called wholesale central bank digital currency, meaning a blockchain-based digital currency that helps banks manage their liquidity positions with each other. At the moment, we have an existing well-functioning payment system called Samos that does it, that ensures that if you go to Woolies and you pay with your card, that your bank actually pays Woolies Bank, so that you can walk out there without somebody calling security because you just stole the bag of groceries, right? So there's a payment system underneath it. And the central bank was interested in sort of modernizing this and finding out if there's sort of benefits in doing so. There was a second project following that project, COCA2, where we looked into securities, equities, bonds, these kind of things being settled while there is an underlying blockchain to help realize efficiency gains that are currently sort of unrealized because of the fragmented nature of our financial system and the financial infrastructure. The banks in parallel also explored the use of stable coins, of digital assets, private cryptocurrencies basically, but not issued by anonymous entities in the shadows, but rather issued by trusted, well-regulated institutions backed by their own balance sheets. And these stable coins have been proposed as a way of enabling the benefits of distributed ledger technology and of crypto assets without incurring all these risks of financial crime and of these unregulated dark corners of the crypto ecosystem. So where we are right now is that several banks are exploring this. The central bank has explored sort of the different wholesale central bank digital currencies, but also specifically a digital rand. So I was part of a team that worked for over 2 years with the Reserve Bank on the South African digital rand. The Reserve Bank had a big sort of a big study that they undertook to find out if a digital rand, an augmentation of cash, a digital means of payment accessible to everybody, which is a real challenge in a country where half the population does not have a smartphone, and where of the other half, most of them only know how to use Facebook and WhatsApp. So how do you make sure that in a country that is this heterogeneous, everybody has access to this new means of payment? Because if you want to make it legal tender even, you need to ensure this universal access. How do you make sure that concerns around privacy, that the central bank suddenly would see all your transactions, that they don't lead to a situation where people would be hesitant to use this new instrument? So how can we ensure that everybody maintains their privacy? So this was studied whether it's feasible, desirable, and appropriate. And the report is with the Reserve Bank for some time now. The fact that they haven't sort of released it or commented publicly on it doesn't bode too well to that they would embark on this journey soon. On the other hand, central banks are not well known to want to be, innovative first movers. They are often comfortable just following on. There's in this report, and I think that's the last comment I make, in this report, there were 3 reasons why a digital rand, this blockchain-based central bank digital currency for South Africa could be a good idea. And it was the biggest point of contention in the discussions with the Reserve Bank, but also with sort of banks and the different organizations like BASA and BankServe and so on that have opinions on this. The first is the political economy. China and India are doing it, have committed to doing it, bringing out their own central bank digital currency. So if we don't want to have a situation where Chinese and Indian startups and big tech firms have a technological advantage over South African and African companies, we should provide the same kind of infrastructure. And that is really what a central bank digital currency is, a public infrastructure. So that's the first, political economy. The second one is there's benefits from asset tokenization, from allowing securities not to be traded in the traditional setting, but rather in a blockchain-based ledger, because there are several efficiency gains from moving from the legacy system to a blockchain-based system, which would bring down the cost of trading securities significantly, so that you can open up funding to small and medium enterprises, to the informal sector, possibly even, that you allow people to tokenize their property, to diversify their property holdings, to alleviate the risk that comes from a large concentration of your wealth in your property usually. And then also as a protection against big tech companies. Louis also spoke about this. There's a lot of data that has been gathered already by big tech firms about everybody including Facebook, about all of your likes and dislikes. And this data gives them an advantage when it comes to providing solutions to the traditional problems of finance, asymmetric information, and adverse selection. So that banks all of a sudden might be in a situation where they are the small fish in the sea when it comes to how much data they have available, how much capital they can mobilize. So to make sure that there's a level playing field for our banks and our financial institutions going forward, a public infrastructure that ensures this can make an important contribution. And I think I'm going to leave it here and look forward to any thoughts, comments, and the discussion that comes.
Thank you very much, Professor George. That was also very accessible, I thought, and the three of you complemented each other presentations very well, so that we weren't getting the same thing, but different perspectives and different takes on the issue of FinTech. So thank you very, very much. That was very exciting. I'm going to open up the floor, so to speak, for questions. So Dr. Tebogo Mapoto will help me. But Tebogo, while you're busy organizing and responding to especially whatever might appear in the chat, let me just ask Vivian to respond to the question of who regulates the regulators, particularly in the case of state institutions, like a regulatory authority with the power, and you don't have to go to China for this, to actually, perform surveillance on citizens.
It's probably partially between myself and Louis. That's a very interesting question, because if you look at the model that we have in South Africa, that's a Twin Peaks model, where we have the prudential regulation sitting with the Prudential Authority, with the Reserve Bank, and then fiscal, or the Financial Sector Control Authority. Control Authority. And it's a very interesting question, because technically the only way in which you regulate would be in terms of your own legislation. So there's not a super regulator over that will be regulating the regulator. But maybe Louis can come in from the surveillance side, because even there you need to look at the it's not absolute, and the limitations of that would be quite important, and maybe through the limitations, that's the way in which, in a sense, the regulators would be able to regulate, because you have to stay within the confines of the legal framework.
Louis?
I have no glib answers. That's one of the key problems that I'm personally struggling with when I work on some of the solutions. It is easy to draft a law and to say these are the legal obligations, but who ensures that powerful agencies actually abide by the law? And furthermore, not only abide by the law, but don't shift the goalposts. We've seen how access to information radically changed after 9/11. So when there's a major incident, it might shift the political envelope. And suddenly things that happened before starts happening on a totally different scale. And that's why on my side, I've got rule of law in there. And also acknowledge that that's part of the challenges, because that's very difficult. Our biggest concerns are in those countries where rule of law is under pressure. There's no easy solution. It's growth and maturity of society, it's assistance, it's support. It happens over time. And these technologies develop very fast. They're available, they're easy to plug and play, it's easy to provide the technical assistance to get the laws drafted. I'm working into small island jurisdictions where that was precisely what happened. But that does not mean it's working, and it does not mean it's safe. So again, it's a great challenge for a group of minds such as this, because the solution is multidisciplinary and embedded in society.
Sure. Thank you.
Can I maybe push back a little bit against this concern? Starting with, what's the situation that we have today? Today in South Africa, there's two types of payment systems. There's a little more, but there's two big ones. There's Samos that settles all transactions between banks, and then there's BankServe that settles, all your smaller transactions. These two entities do have your full payment history for everybody. That's just the nature of how payments work. So using a different technology doesn't change that fact, and they need to have that information for all your KYC, AML, CFT. We have to comply, or we want to comply with the Financial Action Task Force guidelines, because otherwise we're going to move from gray list to blacklist, and our banks will be cut off from international financial systems. So as long as we want to play by the international rules, there is a forum there's an international community that enforces certain standards, certain rules that have to be applied in South Africa. And I think that system hasn't worked so badly so far. So that's the first thing. There is something else out there that makes sure we don't go completely haywire on what we do. We already have the information that is in question in our current system. The other point I want to raise is central banks aren't the natural candidate for going rogue in a country. I know of very, very few, if any, examples where central banks were the institution that, started to shift the goalposts. Most central banks, especially a hawkish, conservative central bank, like I would say the South African Reserve Bank is, have been very, very wary of shifting their goalpost beyond their mandate. We had these discussions with the Reserve Bank around the digital rand, where they said, well, financial inclusion is a good example. People always bring up financial inclusion as a reason why we should, embrace this technology. And the Reserve Bank says, rightly and clearly, show us where in our mandate it says that we are responsible for financial inclusion. We are not. The Constitution and the Reserve Bank Act define what we should and shouldn't do, and financial inclusion is just not a mandate that is anywhere on par with price stability, financial stability. So I don't think that these concerns, I don't think they are unfounded. It's good to be vigilant, especially before it has happened. But on the other hand, historically, I think we need to put it in the context of what the institution is that we are dealing with. It's different if the Reserve Bank does something than if it's the state security agency. I would be more concerned in the second case.
I love this exchange. Well done. Thank you. Louis, you want to come back?
If I may, thank you, Chair.
Yeah, of course.
I think this is a great discussion. I'm going back to the spiral. The KYC system and FATF was introduced to combat another problem, and that's organized crime. The system has been created. Now we create more technology to serve the system. The system is not delivered in relation to organized crime. It has not delivered what was promised in the 1980s. But now the system became embedded. What you're referring to as a central bank digital currency, it still leaves all of the other FinTech products outside that realm. And I agree. Central banks are conservative and can be trusted. But the moment that they have a CBDC, they become part of the surveillance system created because they need to monitor for suspicious transactions, and they will need to report that to the financial intelligence units. You referred to FATF. South Africa is a member of FATF. FATF is a body of governments, a select body, now 40 governments that have made specific rules. And we've been working and studying them for 30 years. So financial services have become part of the intelligence surveillance system. That is how it's been designed. And all FinTech products serve that. All of the RegTech products that have to pick up on abnormal behavior, the more powerful ones feed off the data that you refer to of the social media companies. It's this data frenzy that poses the risk linked to the security complex.
Absolutely fascinating.
Thank
For
you.
those of you who are listening, we will, once we get, if we get sign off from the three speakers, we will be able to make the transcript available for you for research or teaching, or just for your own information. But this is a rich discussion, which I really appreciate. Vivian.
Just want to take it further around 2 points. The mandate, yes, I agree with Kopia that the regulator has, or SARB has, a certain mandate. However, it's quite important to know that in terms of the Financial Sector Regulation Act, there are also those, especially when you look at the role of the Prudential Authority, what one would call secondary mandates. So it wouldn't be correct to say that because your primary mandate is around the protection of the rand or price stability and then, of course, financial stability, that SARB should not be looking at issues such as financial inclusion, competition, consumer protection. They're actually all listed in the Act. And that is the around the CBDC, just some additional information for Kopia as to why there's not been sort of a public announcement of your report. The Reserve Bank has now subsequently asked myself and asked me and Alistair Milne from Loughborough University to be co-PIs with a group of Reserve Bank researchers to really look at digital assets in transactional banking, which goes beyond CBDCs and not just stable coins, but that the whole sort of the use cases, because they weren't yet convinced that CBDC and a retail CBDC might be the answer. So I think it's a bit more complex than looking at some of the benefits that were, around the political economy, asset tokenization, and then, of course, the use of blockchain, which by itself also brings some other legal and regulatory concerns, even if you are talking about trusted services or providers of those blockchain within the blockchain system.
Thank you. Teboho, can I just check with you? Are there any questions so far?
I don't see anything in the Q&A or the chats, but I have requested the participants, if anyone has a question, they can raise their hand and I'll unmute them to raise their question live. So if there's anyone with a question, you can raise your hand and I'll unmute you. But so far there isn't anything.
So there's silence. Again, while you guys are listening, please feel free to raise your hand. I'm just going to continue so that we don't lose any time. Kopia, Vivian, and Louis. Louis, you concluded with a reference to Islamic jihad, which, as you can imagine, in these times is a very fraught subject, etc. And let me just say this as president of this academy: I absolutely abhor the terrorist violence of Hamas. I'm not making a case for Hamas, but it does seem to me to be rather one-sided here, because what you have in Israel is state terrorism that, as many social scientists have said, in the reaction and the violence in Gaza, meets the textbook definition of genocide. I'm convinced about that. Now, surely there should also be in the ethics, in the policy, and in the politics of regulation, not just an eye on Hamas, but also on the state of Israel. Is there such a discussion, such deliberation, such an understanding that state violence, state-perpetrated violence, is no different from, and also requires, as you guys know, between the US and Israel, for example, a fairly active process of transnational, transactional financial arrangements.
Colleagues, shall I wade into this first, and then you're welcome to add. Let me approach it from a slightly different tack. what we have seen developing is lines being drawn around who deserves access to financial services. We've dealt with it in South Africa through financial inclusion, but there's also a political element to that. And again, that links with South Africa's history, but also the current politics, and that's sanctions. We've seen a dramatic escalation in sanctions after Russia's full-scale invasion in Ukraine. We've seen the first part of that in 2014. But that means also, if we look at money laundering and perhaps going back to the 1980s, it's often said that if we did not have all of the money laundering controls in place, crime will destabilize the financial system. It attacks its integrity. The financial system worked quite well until the 1980s without any of these laws. And that's perhaps for you, Kopi, as an economist. This has been a legal overlay put on it for certain purposes, and basically to enlist the assistance of the financial services. And this has now also been enlisted in relation to sanctions. But it's playing out in other areas too, because we know that some banks are becoming reluctant to bank fossil fuel companies. We know that a number of banks have signed up to don't bank the bomb, stepping away from any arms manufacturers in the nuclear space. So in the past, we had a neutral system based on kind of money don't smell, pecunia non olet, that we knew, but that has changed. Now, in that process, bringing it back to South Africa, last year, South Africa changed its definition of terrorism and therefore also terrorist financing. Previously, the parliament kind of crafted very complex legislation to target terrorism and exclude freedom fighters. That exclusion was taken away last year under pressure to meet FATF requirements. And hence, South Africa now has a very different definition, bringing into play people viewed as freedom fighters in the past that are now captured under this definition. So the definitions internationally are also at play and are somewhat fluid. This all raises complexity. But I think the fundamental question is, what is the role of the financial system, and has it become an instrument of politics, or perhaps to co-peers, the economy best served by allowing money to flow regardless and advance these causes in different ways? As a lawyer, I'd be interested. This is not my area of expertise, but I really think we need much more engagement about that, because if we continue down this line, where will it end?
Kopia and Lipovia?
Yeah, so this is a very interesting question. Like, what is the purpose of the financial system? Is there a moral sort of purpose on top of the pure efficiency reallocation of funds? If somebody asks, like if my students ask me, I will always give them sort of the textbook answer. Economics is the study of the allocation of scarce resources, and hope that they don't push any further. And then, you know, just shut your eyes and okay. So so in that sense, we've always shied away from addressing this answer, and I think it's becoming much more difficult now. The Hamas-Israel discussion, I think, is much more difficult than the Russian one. The fact that part of the Russian sanctions, that we sort of cut Russia, or largest part of the Russian banks, off SWIFT, of the international payment system that makes sure that banks in different countries can pay each other, because banks within a country can pay each other because of national payment systems, like the one like Samos that we have in South Africa. But internationally, you still need to find a way to make sure that they can pay each other. Also, that the central banks can pay each other, because there's like an accounting requirement that flows of funds between the private sector are mirrored on the central bank side. Anyway, so SWIFT is the way to do this. By excluding the Russian banks from this as part of the sanctions package, we really stepped into uncharted territory where we use the financial system as a weapon. And it's not so clear to me where this will end. I thought that it's the wrong decision to do that with SWIFT, irrespective of sort of where you stand on Russia versus Ukraine, which is an easier decision to take, I think, to say, well, this is an invasion, unprovoked. You know, Russia needs to be punished for this. But the financial system is probably not the right place to do that. It really reflects more our desperation to find tools to deal with this new world that we are entering, and we are resorting to the financial system to do what we can't do with other means of diplomacy and politics, and that feels desperate and feels wrong. It's not just though that sort of we see a new world order emerging that challenges the answer that I can give to my students when they ask me about what's economics and what's finance, but it's also the new technologies that we see. Is like blockchain is an easier case. AI, I think, is much more difficult. We only spoke about this briefly here, but I was a few days ago at the Reserve Bank. They had a conference on financial stability where the problem was raised. So we have all these new AI systems that are emerging. Who regulates them? How do you regulate them? How are they being used? We know that they are biased because the training data, comes from a weird, white industrial male data providers, and it is not clear how we deal with that part either. So we are, as sort of people interested in regulation and in economics, we are sort of trapped in this. We are faced with this dual challenge of a very different political economy and a very different technological frontier. The risk, though, going back to what Vivian said earlier, the risk, though, of the approach that the Reserve Bank has taken right now is wait and see. Right, and they don't want to be first. They want to wait to see what happens in other countries, what happens with the technology. The risk in this situation at this point in time is that the technology makes leaps at a speed where, if you decide that you're ready to do something, the options that you have are limited because Google and Facebook have already captured all our data. They are much better able to predict default probabilities based on social media data than the banks ever can. The risk of not doing something now, I think, is much higher than the Reserve Bank makes it out to be, and that the South African government makes it out to be. I think it really is a case where if we don't act now, the big tech companies in the US, in China, maybe in Europe at some point, they make these decisions for us. And then we are faced with the impossibility of trying to limit the use of these services in South Africa. I think that's a very real risk right now that we need to address.
Right. Thanks, Kopia. Vivian, can I give you the last word here?
Yes, I actually agree with Louis and Kopia looking at this from their different perspectives. My point is that I think we are at a very difficult place, and I agree around the complexities of AI could be another topic for you, Prof. Janssen, because it also impacts so greatly in the tertiary or the higher education space and other spaces. But I think if we struggled in the financial system, even with how to deal with transformation and social justice kind of issues, I think we had a very difficult space now, having to deal with the moral and political kind of issues. I see in the Q&A, someone made the comment that one person's freedom fighter is another person's terrorist. And it really depends on the perspective that you're coming from. And I cannot see the easy answer yet, but seeing that we are in a very complex juncture as far as financial systems and regulation is concerned.
Yeah. Professors, you have been outstanding for non-legal, non-economics people, very clear, very, to have clarity this side of complexity is always difficult for a professor. And you guys have done that very, very well. And I want to thank you, Louis, Kopia, and Vivian very, very much. I'm going to ask our executive officer, our leader, Professor Imla, who is also not a FinTech specialist. She's a world geneticist. But Imla, if you could do the official thanking and closing, I'd appreciate it.
Thank you very much, Jonathan. Colleagues, you have been amazing. As I said to you, listening to you speak on the concepts of Bitcoin, blockchain, cryptocurrency, etc., it is a discussion I have a lot with my nephew. He's very, very well invested in the knowledge of cryptocurrency, and he's been trying to get me involved into making that giant leap and investing likewise. But while that may be interesting, it's also very interesting to see how expensive it is to buy into Bitcoin. I was just looking up the exchange rates of how much it costs to buy a piece of a Bitcoin, etc. So obviously these are very specialized concepts. And as Professor Jansen has said, you have helped us try to unpack that. If anything, whetted our appetites to go and read a little bit more and to familiarize ourselves with this. When I did accountancy at high school, it was debit and credit. The double ledger entry, as was mentioned, was obviously the way forward. And then we got introduced to this entire technology of credit cards, electronic transfers. We kind of went deep into the deep end of the digital era. I mean, as I said, now I have a key that I need to do electronic banking for the academy. It's a dual process for security. One, that I have a key system to follow after the financial manager does his bit, which is followed by what the accountant does. So we invest a lot into security. And the reason for that is that hackers have the equal intelligence of those who are putting out new technologies to break into it. I'm also very avidly now following the interface of artificial intelligence, and particularly some of the threats that the growth, the exponential, more than exponential growth of knowledge base based on artificial intelligence poses to us, and it came out in this discussion as well, that the computers are learning very, very fast how to break through these securities. And there's a very hot discussion about cybersecurity issues with the growing knowledge of artificial intelligence. So I think we're living in a very interesting time. And I think you have really, really given us insights as to being aware of FinTech and what all of this has to offer, both in terms of the growing utility in economy and also the cautionary aspects of not just regulation, but also where things could go wrong. So with that, colleagues, I wish to extend a heartiest congratulations to all of you for sharing your thoughts so clearly with us, as Professor Jansen has said. And thank you again for inspiring us to want to go and learn more so that we grow as this technology advances, not just internationally, but in its applications locally as well. And thank you to our chair, Professor Jansen, for hosting his 5th annual Science for Business Leadership Forum. Has brought us very exciting topics, and I'm sure this trend will continue going forward. So thank you, colleagues, and have a good day forward. All the best. Bye.